Hello, this is Coach Mike from winningstockcoach.com. Going to begin our weekly market overview. We've been covering a consolidation pattern through the markets over the past 10, 11 weeks now, and it's been quite a difficult time. We saw the week before last, we actually closed just higher on the S&P 500 than our prior 1878.04, the March 3rd high, that kind of gave us that swing point, the consolidation top, since we started this pattern. As odd of a trading week as last week was, we actually still closed above that line. What that really indicates to me is that we need to focus on that weekly close. So long as we continue to hold strong above that 1878.04 for the weekly close, we should find some continuation on this consolidation range breakout. So would I love it for it to be made easy for us and we see just clear movement shooting up above? Absolutely. And ironically, through my chart studies this weekend, I found a lot of charts that after Friday came down to their lows and had a really, really teeny tiny green day, or some just a really flat day, giving them the potential to make a move positive from these points. So I definitely want to encourage to be watching markets Monday and Tuesday especially. If we get this positive movement from the 1878.04 value on the S&P 500, I think that we're okay for long entries, so long as we continue to monitor that weekly close in the necessity of the 1878.04. I wouldn't sit and focus on it too awful closely, so long as we get the close above that line. Your longs in individual stocks should do just fine and hold their support level. That's really what we use the indices for, is to determine if support and resistance will be held or broken. So that's the important focus here. The other thing we need to watch for, we've talked about this dotted line in this channel. It looks a little rough here, but it's actually matched up with all the closing prices for the weeks. Was made on a mountain chart since QE3, the current QE that's being tapered from, was initiated. A few weeks ago, we had a close below that line, much like we saw on the Russell 2000 3 months ago. And on the Russell 2000, it actually, after closing below that same channel, it actually shot up to a new high over the next month to month and a half, and has been making lower highs and lower lows ever since. So that's going to be one other thing we're going to keep our focus on. But for right now, play it like we see it. And the 1878.04 weekly close is an important thing. And as you can see, our weekly close of 1878.48 held us above that, giving us an observation of a potential to the top side. The Dow Jones Industrial Average, the DJI chart, performed much better than the S&P 500 this past week. It gave us a green week with continuation above that consolidation line. The consolidation line value, 16,478.41 cents. That's going to be our key support level now, as we look for momentum on the consolidation range break. And as you can see from this channel that I have demonstrated on my chart, we're really trading in the upper half of this channel. The dashed line actually indicates the 50% line of the channel, so it's just the halfway mark. And as you can see, it's held up good enough as a support point, and we see us currently trading in that upper half of the channel. So as long as we stay in the upper half of the channel, the dash line becomes our support point, and our solid upper line becomes our target area for a positive move on this range break. So, could we get into the 17,000s? I'm not going to say no, because the chart's saying so long as we hold above that consolidation range we just broke out of, that we could very well hit that. Again, I think we need to have a little bit of caution because of the typical, sell in May and go away the summer sell-offs. And that's something that we do have to contest with. But I think that if we're going to make this break, we still have a safe level of support that it's worth the risk, because usually those summer sell-offs don't really come in until the last week and a half of May, though anything could happen to trigger an earlier sell-off, at the higher volume rate. So I wouldn't be too afraid of the summer sell-offs when you could still have a couple weeks of fairly decent trading before that comes in. And, I wouldn't worry about it in either direction the market goes when it comes to that, because if you're trading properly, you can make money no matter which direction the market goes. We talked about the Russell 2000. I wanted to show you, after it had closed a week out of that same channel, that QE3 channel, started in November of 2012, same time as the S&P 500 one. It did shoot up, and over the course of, I guess that's 4 weeks, shot up to a new all-time high, and ever since has been making lower highs, lower lows. You're going to see me switch this chart over to the daily chart, and I want to speak about it here for just a moment so you can see what we have right here is basically what I would call the put up or shut up time for the RUT chart. And what I mean by that is the RUT is either going to be heading topside immediately, or there's going to be a large scale breakdown in the small caps. And that's a plain and simple. We actually opened Friday. It was a little scary at the open to see it opening below this support point that's marked by the lowest close in this trade series. But so long as we can hold this area, this purple line I have horizontal on my chart, we could find a good series of positive momentum from this point. But it is imperative that this support level be held, because as you can see on the chart, just monitoring the normal progression, if this support level is not held, any subsequent bounce after it fails is just going to be an interim relief of further downside that could get very, very ugly. So I said it last week, and I'm going to say it this week, I'd really be watching those small caps, because if there's a group of stocks that could make a move to the top side, it would be your small caps, simply based on the RUT and the room it has to move topside. But they will also more than likely be the most, I guess you'd say, the riskiest or the most dangerous area to trade, because should it fail that support point, I think a failure could be rather devastating. I'm not going to sit here and predict whether it'll fail it or not. I'm simply looking at the aspect of where the support is and what the chart's doing. It had a really strong day on Friday, stronger than the other indices. So we really got to focus on the small caps. Watch your RUT, your IWM if you want to trade the ETF, but have a good level of focus for that support point, because that support point could be a make or break point in the small cap market. This is Coach Mike from winningstockcoach.com. Just encouraging you to have a plan for every trade you make, and to trade according to the plan that you've accepted prior to entering. Best of luck to everybody, and God bless.